What happened to our property markets in January 2023? Well, in today's Property Insider video, Dr. Andrew Wilson gives you the latest figures for both apartments and houses, and we discuss what happened to the property markets for the whole year in 2022. And there weren't the property price falls that the dire predictions from the negative Nellies and property pessimists suggested. So let's look at the facts so you can understand what's ahead for 2023. If you want to keep up to date with what's happening in our property markets, please subscribe to this YouTube channel and click the little bell icon so we can let you know each time a new show comes out. As we ended 2022, there seemed to be a number of dark clouds circling the economic horizon and our property markets. Consumer confidence was low and many people were cautious, while others were downright fearful. In fact, 2022 was a year of two halves for our property markets. Sure, the Melbourne and Sydney property markets peaked early in the year and prices then started falling, but most other property markets kept rising. And throughout the second half of the year, in these weekly Property Insider commentaries, Dr. Andrew Wilson and I consistently argued that behind the dark clouds of doom and gloom, the fundamentals for our economy and our property markets were resilient. In fact, over the 12 months to December 2022, only the Sydney and Melbourne property markets recorded price falls. Now, that's not to say that other capital cities and regional locations didn't experience price falls. They did. What I'm mentioning here is the price movements over the 12 months to December 2022. So what happened in the first month of this new year? How have our property markets performed? That's what I'm looking forward to hearing from Dr. Andrew Wilson, Chief Economist of My Housing Market and Australia's leading housing market economist. Hi, Andrew.
Yes, hello, Michael, and we're well and truly into the new year now. Couple of days away from, February is upon us.
Yes.
And so we've already had a month go by, but I think that typically happens this time of the year. We wonder where January went, but it is a holiday period, so whatever. But the housing market keeps on keeping on. And of course, we do have the latest figures today for what happened over January in terms of house prices and unit prices. Of course, the January numbers are always affected by the holiday season. We have significantly lower volumes of sales occurring. And of course, most of those sales that do occur are perhaps in holiday market locations. So price points can tend to be lower. But it is a month of holidays, a month of market pausing, we could say, but not a complete halt. And we do have some activity to report on for January, first with the latest news.
Well, before we do, Andrew, let's do a quick recap of what happened for the year 2022. And boy, it was nothing like what those property pessimists had predicted, was it?
No, the national house price fell by 4.3% over the year. And of course, what we talk about, the 2022 measures, were the December quarter median house price for 2022. So that's December quarter versus December quarter over the 12-month period. And the results were that we only had two of the major capitals where prices fell. That was Sydney and Melbourne. Sydney was down by 9.1%, Melbourne down by 6.1%. The other capital city markets all recorded growth over the year, Brisbane, Adelaide and Perth. But of course, when we take the national price, we use a weighted average. There is no such thing as the national house per se. So we use a national average, a weighted average to get that national median house price. And of course, the weightings are based on the number of properties in each of our capitals. So that means obviously our biggest capitals, Sydney and Melbourne, they take the lion's share of the weighting for that national house price. Therefore, that's why we saw the national house price down by 4.3%. It is misleading in that sense because the headline is national house prices down, but in fact it was really the Sydney and Melbourne markets, particularly the Sydney market, that were the clear underperformers over the year.
And Andrew, if you dig even deeper, the markets were more fragmented because it was more the upper end, the more expensive properties that suffered. Of course, they're the ones that did the best during the previous boom.
Well, yes, Michael. In fact, the prestige market, the top end of the market, has been probably subdued for some time now. But it was certainly the budget end of the market that pushed up prices last year. And I think that's where we're going to see the energy from the bottom up in most of our capital city markets, particularly the higher priced markets of Sydney and Melbourne. And that's because, of course, affordability is an attraction for buyers at that end of the market. And of course, that end of the market is attractive to investors and first home buyers who are currently, opposite reasons, have a lot of attention on the rental market where rents are rising sharply.
So, Andrew, we showed you figures for 2022 for house prices, but the apartment market outperformed last year, didn't it?
Well, it did, Michael. And even though we did see falls similarly in Melbourne and Sydney, we saw the reverse strong growth in Adelaide and Brisbane. In fact, both around about 10% increases in unit prices over 2022. So units outperformed houses, and the latest data shows us that that is continuing into 2023.
Well, okay. So now what did happen in the month of January 2023, Andrew?
Well, as we mentioned before, early days, of course, this year, Michael. The market will gain momentum over coming weeks. The auction market commences in the first weekend of February. Numbers will ramp up quite quickly, and that'll give us a much clearer indication of how our markets are commencing 2023. We do have an interest rate decision also, which will impact confidence to some degree, although I do think that consumers, by and large, through 2022, tended to shrug off those monthly interest rate increases, and we can see that, I guess, through what has been a strong period of retail sales. But for the results over 2023 so far, we saw similar outcomes in terms of declines. In fact, when we look at house prices, we had all capital cities, with the exception of Darwin, record house declines over January. Now, what we're measuring here, Michael, is the January quarter. So that gives us a more of a robust market view, because we're not taking January in isolation, which, of course, as we've discussed before, we have to account for what is a quiet period, the quietest period of the year in our housing market. And of course, because of that, we have a very significant seasonal effect on price outcomes. So we've included January as part of a quarterly data set, and we compare that to the December quarter in terms of how our markets have moved. And we've seen, again, quite a modest decline in prices, still a decline with Darwin, the only capital city to record price increases over that January quarter. Brisbane was the underperformer, down by 0.8% over the month, followed by Sydney, down by 0.7%. And when we look at the annual figures, they're quite similar to what we saw for the December quarter versus December quarter data that we just discussed, Michael, with Sydney being the outlier, with prices still down by 9.3% over the year, followed by Canberra down 7.7% and Melbourne down 5.1%. Top performer is Darwin. Tends to be a volatile data set. The Darwin data set, annual house prices up by 6.9%. Followed by Perth up 5.4%. So those annual numbers obviously are quite similar to the previous quarter, the December quarter's results. But the year has started off with what we might say more modest declines in prices. But as I discussed before, Michael, we need to wait for the season to get underway in full, and that'll occur over coming weeks to get a clearer picture of the underlying energy in our markets.
And what about the apartment market? Clearly, with affordability being an issue, many people are now making the decision, I still want to live in that neighbourhood, I still want all those amenities, so they're looking at apartments, townhouses, units.
That's right, Michael, and similar to the December quarter results, where we saw a better performance from the unit market compared to the house market. In fact, it was only the Melbourne and Adelaide markets that recorded falls over the January quarter compared to the December quarter. Melbourne was down 1.7%, Adelaide down 0.3%. Of course, Melbourne has a big unit market, so that was a contributor to national unit price, down by 0.2%, but certainly a much better performance from capital city unit markets, Michael, over the January quarter compared to the house market. And I think this is a trend that will continue, as you suggested, particularly because of affordability advantages through 2023.
I just wanted to interrupt this week's Property Insider chat to remind you that this is not specific property advice, because we don't know your personal circumstances. But if, like many property investors, you're wondering what's the right thing to do at present, should you buy, should you sell, should you wait, you can trust the team at Metropole to provide you with direction, guidance and wealth-producing results. Whether you're a beginner or an experienced investor, at times like we're currently experiencing, you need an advisor who takes a holistic approach to your wealth creation, and that's exactly what you get from the multi-award winning team at Metropole. We help our clients safely grow, protect and pass on their wealth to future generations through a range of services: strategic property advice, buyer's agency, wealth advisory, property management, renovations and development management services. Go to metropole.com.au and explore your options with a complimentary clarity consultation. Last year, the property pessimists were out there talking about double-digit house price falls. We're talking about the Australian market. That's what they're talking about. And you've shown that units have dropped minus 3.6%. Houses dropped a little bit more than that over the year. But in this chart of yours, it actually shows that the double-digit falls that they were predicting have never occurred. And as far as I can see, the economy, employment situation, our outlook is nowhere near as bad as to suggest such dire predictions.
Well, using that, which I think the logical measure of house prices over a year is that December quarter to December quarter movement, we can see that the historical evidence clearly shows that we've never even been close to a 10% decline over the calendar year, Michael, in house prices. And if we go all the way back to 1987, we've only had 4 years where house prices have fallen over the year. That's based on that December quarter to December quarter change. And that was 2008, 2011, 2018, and of course, 2022. And last year's result down by 4.2% adjusted. It really is around about where we tracked in 2 of the previous 3 declines in 2008, 2011. And the steepest decline we recorded was 5.5% fall in 2018. And certainly, Michael, that's nowhere near the 10-20% predictions that were made last year. But with most of the doomsayer predictions, they again proved to be completely wrong.
Well, over the next week, there's going to be lots of data coming in that's going to give us an indication of what's ahead. But just recently, the latest CPI figures came out. So next week in our Property Insider chat, we'll put all these things together and maybe I can ask you to give us an indication of what you think the Reserve Bank's decision is going to be in its first decision for 2023.
Yes, Michael, very interesting. The February 7th meeting for the Reserve Bank, first of the year. It will, to some degree, set the tone for the rest of the year. I think interest rates are going to peak lower and sooner than many again predicted. But the data is still mixed, Michael. We'll discuss that next week. Perhaps an outside chance the Reserve Bank may decide to sit on their hands and not change official rates for February. But I think the odds are still in favour of another increase. But we can discuss that in some depth looking at the relevant data next week, Michael.
We can also discuss the rental markets, which interestingly are still bounding with rents increasing. And the news only came in today, I read, Andrew, that China's saying to all its students, hey, you've got to go back overseas to study. That's going to put extra pressure on our rental markets, Andrew.
More increases in rents, and that'll lead, of course, to eventually higher prices as well. So demand remains ahead of supply in the Australian capital city housing markets generally, and likely to accelerate in 2023.
So, in summary, only modest falls for the first month of the year. And I guess what we're seeing, Andrew, is a decrease in the rate of decline of house prices.
Yes, that's right, Michael. But that's the trend we saw following the winter freeze last year. Spring markets rebounded, certainly modestly, eased back towards the end of the year. But I would expect to see, and we will have our latest auction results next week as well. That will be interesting. But of course, we will expect to see relatively low numbers. So we need a couple of weeks to build up the numbers to get a clearer indication of how our auction markets are tracking, which is always a good insight into the broader housing market.
I look forward to catching up with you again next week, Andrew.
Yes, thanks, Michael.